Welcome. My name is Medesa Falajimo. Welcome to this simple trading strategy to be profitable from the global financial market. And so, simple winning trading strategy. And of course, anytime you trade on currencies or forex, as it were, there are need for you to understand the fundamental. So you need to have fundamental awareness. It has to do with economic news. Okay. So very quickly, if I look at, for instance, you go to a platform, e.g., Forex Factory, and there are other similar uh, platform like that. So let's look at Forex Factory, and you want to see are there fundamental economic news, all right, that are coming up because the vis-a-vis have effect, especially if you're a day trader or a scalper, and so you wouldn't want a situation where you're affected by the news, and so that you need to have an awareness about what's going on and all of that. Today is Monday. We actually do not have any news. Rather, we have a holiday, the bank holiday in the US, and so, and in the UK. So you can see trading may be very, very boring somehow today. And so you want to be careful. All right. So tomorrow, so the following day, depending on where you are listening to this, you look at it. Are there any important news? The one with red envelope are the more important. The one with thick brown are closer, average important, and then other follow suit. Then on Wednesday, we have we have FOMC meeting on Wednesday. Now, other news are important, but correlated to the currency. And that's why any currency you are trading, you need to have an idea if there are other news, economic news around them. Okay. So you have this. Okay. So FOMC meeting on Wednesday. On Thursday, we have unemployment claims. This is very, very fundamental that have a lot of effect on the price movement, especially on currencies that has to do with dollar pairing currencies and all of that. Okay, so now next thing is that you want to look at, right? So you want to look at, right, sentimental, of course, awareness about, so just like yesterday, we saw how somebody short Bitcoin, what $1 billion. And so you can now tell the impact of this. So now let's quickly go. Your trading plan is very important. I'm not going to do the detail here. Your trading plan, number one, you want to look at risk per trade. And I say 0.5, 1%, 10%, 20%. Now, what do I mean by 0.5? So for instance, if you are trading with you have registered with us on Capital Extent, and you want to trade, you can do this once and then improve on it. So let's say what you have and you're trading with what your main capital is $500. So what can probably, to be very conservative, you want to expose only 10% of your equity into the market, all right? But then you want to know that any trade that's going to have more than 100 pips as a stop loss or more than 50 pips as a stop loss, you wouldn't trade it. So you can work this way and then you calculate. And so 10% is $50, and then you say you can use 0.1. So for that, you can divide this 0.1 to 2, that's 0.02, as 0.05, divide to 5, 0.02 in 5 places. And for that, that's what you want to engage, okay? So now, the next you want to look at, loss limit per day. So how many times should I lose a trade? And then stop trading for that day. So twice, once you hit 2 times in a row, then you need to offer markets and do other things. Profit target will be 2 to 5% weekly. So I'm just being conservative, okay? And it even depends on how much you are trading with. So 2 to 5% weekly, and of course 8 to 20% monthly. Okay? Now, if you can really put yourself on check on some of those conditions, you're probably going to do well. So my risk reward, minimum of 1:2. So any trader cannot give you ×2 of what you have set to bet into the market, don't enter. Just leave it. All right, so that you can maximize and build your consistency of trading. Okay, so now, so trading period, of course, you need to know how many hours you want to spend in the market. Okay, in the New York session, I want to just spend 1 hour, or what time to what time, right? okay, from 1 p.m. to 2 p.m. and I'm off, irrespective of what has happened or what's happening, you move. Okay, 3 hours, depending, and in that order. So you have to reach the trading plan that way, right? Then trading frequency. How many times do I want to trade in a day or in a week? It will be 3 times in a week. Okay, so maybe 2 times or 3 times in a week, so that you can create time for yourself. Now let's go. Now, so market analysis. There are two things you're going to do on your market analysis: pre-market analysis and market entry. So what we use as a platform to do market analysis called TradingView. If you are new, of course, if you have been following us on our group or follow my channel, you're going to see I talk about TradingView. Now I'm going to open it to TradingView. So there are things that are available on the TradingView. So I'm going to take them off. So pre-market, the pre-market activities is what I want to do. For instance, let's say before the market open, you have already checked all your stuff. And what we say is that mark the key levels, all right, and all the like. So it can be anything. So this is gold. So you probably want to go on a higher time frame. So you as a day trader, 1 hour is okay for you for a higher time frame. But sometimes it's always good to have the overall perspective of the market. If I go on daily, for instance, good. Okay, so here is daily. Okay, so I want you to pick up something here. Now, looking at the market practically, and of course, you will pay attention to the fundamentals, having understood that. Now, when you come into the market, so pre-market analysis is very simple. And then I will say to people, you want to trade for the day, and then it's a beginner. The first thing I recommend for you as a beginner, do not have more than, do not have more than just like 2 to 3 or 2 to 5 or 3 to 5 instrument in your array of trading. That's your checklist or watch list as this. Now, on the daily time frame, you look at this market on a daily time frame. Yeah, this is actually a range market. Yeah, it was an uptrend, but now it turned to kind of a range, right? But if you look at it this way, here we have the market had a high here and a low here, and a created high here, another low here. This high was not high up to this. You have to get that this is a week, but this is, so looking at it, this was the previous high and the previous low. The market swing up and the swing down. So this is a higher low and a higher high. So now we're going to look at sometime when I just want to tell you, when the market start getting confusing, so you want to look at it. So practically speaking, I don't want to get too complex. So I'm going to mark this as the highest we ever record in this swing, daily time frame, just to have it. As a beginner, you don't complicate things for yourself. Okay, so let's leave this way, and then where is the high or where is the low that give birth to that high? So this is daily time frame. Ordinarily, as a daily day trader or scalper, you don't need those things I'm doing, okay? But I just want to probably expand your horizon of understanding. Now, this is the low that gave birth to that high. So on daily time frame, I've gotten a swing low and a swing high. The next I want to get that is more immediate to me, and sometimes I could tick in this, guys. All right, just ticking it. Yeah, perhaps just ticking this, guys. Sometimes I could draw a zone for it. Okay. So ordinarily, we do not need that to even bother ourselves to this extent. Okay, that's good. So we got a high, we got a low. So this is swing low and a swing high. Then we got the new swing low, which was here. All right, which was here. So this is a low after this high. Now that gave birth to this high, but this become a lower high. Good, right? So let's go. Now the strategy I'll give to you guys is support and resistance strategy. So this is a lower high. Why is it a lower high? This high is higher than this. This high is lower than this. Now it's creating a kind of market structure shift, right? And how did the market actually shift? Market shifted because this is the high that gave birth to this, and the market crushed down but never broke this. So ordinarily, on a larger perspective, the market is still an uptrend. All right, on a larger perspective. But within this time frame now, something is about shifting or changing. Reason is that until you actually break this, you can't say you are bearish. Okay, so this is the complex thing about market structure. It doesn't form a textbook format all the time. So let's go. I don't want this thing to be too long. So here we go. We got a high here, so lower than this. So then this guy actually broke this low, which makes sense that things about to shift or change. And then we got this, right? So let's take this guy. We got this guy now. This guy now. Okay. So what happened is this. This is now lower than this. So what you want is for this guy to break this structure, right? To break this low here. Okay. So this guy to come down and break this low. So that means market is changing because this is a high, this is a low, this is a high, this is a low, this is a high. Once this guy break below this, then market is shifting entirely. So look at the complexity why the market is actually not moving. Now, this market will have been fantastic. If we take out this and take out this, that will have been enough. Then we now have this as a new low and no longer this. And this will no longer be any high but an internal structure and to break this. But nevertheless, nothing happened that way. Nothing is moving it up here. So we are having a tentative back movement of the market. Now, if I've gotten all of these are like external liquidity I've just identified. Now, so I'm going to go down to 4 hours, 1 hour, because if you're a day trader. So, but combination, I'm hybriding this combination of a day trader, intraday trader, all right, and a scalper. So I go down, excuse me. So now there is thing you want to form, you want to look for here. Now you want to look for where is the yesterday high. This has captured that. This was yesterday high. So and where was previous day low. Here is this previous day low. But maybe not even looking at this previous day low. I'm looking for a kind of swing low. So this is a swing low, which is 4 hours time frame that I'm working on now. So this is a swing low. Perhaps I could change this color because sometimes it makes sense when you're able to identify where you are, okay? So it can be labeled, and you can see why I tell us most time I said, don't trade too many instruments at a time. So I'm going to change this color into blue, something like that. So I hope this is going to come out here fantastic. So this is a swing low. So this market that is coming down here, certainly, what are you going to say? This low should be grabbed because 4 hour time frame is a high. It's what's it called? It's an uptrend. Okay, so in 4 hour time frame is an uptrend, but you've seen that we still said that even on daily time frame, the downtrend has not been confirmed because we have somewhere down here that was the lowest on the daily time frame. So you can see the range you are doing now. So here was yesterday low, but that was the swing, right? So here is a low, a high, a low. So this higher than this. So this is an internal structure, okay? This low, right? So this is at a stretch up here and all of that. So let's quickly pick something. So I'm going to pick another line here, which still have 4 hours. This is, okay? So just make sure you identify all of those pivot points because this is a swing, right? Now, so for like, I'm going to go down to this, perhaps if it's necessary, right? So just to not to bother myself when the market get there, because sometimes when you do all of these appropriately, you have saved yourself. Remember, this ought to be done before the market. Okay, if you're a swing trader, that will have been done on weekly anyway. So now let's go to 1 hour. So should there be any other area of interest that you want to look at? Some pivot point and all the like. Good, fantastic. So if you do this, and there's something I did not tell you to do, there you're going to right click on your screen and then go to settings, and you want to go to your event and enable your session break. So it's going to help you to identify different days. All right. So that makes a lot of sense. Does that make? It does. Okay, good. Now, so look at where we are now. So where we are is this very simple. So you can see clearly that the market is going to travel down here. Now, so if the market is going to travel down here, it's either this market will travel down here and shoot this previous day low before ascending up. So the question is that sometimes you probably want to wait for it to come down, or if you know what you are doing per time, you're going to take advantage of some move, right? So here you have very clear that this market is still an uptrend, right? So the market can lose off because this is a high, this is a low, this is a high. Now this low is already low, but it has not returned for you to say, okay, this is a higher low than this. So sometimes market could return down, to the demand zone and then mitigate it perhaps. So if you look at these guys inwardly, you probably can tell us that, okay, on 1 hour time frame, can we find any imbalance? We have about two-step imbalances. This one and this one. And when you have two-step imbalances, you probably want to work with the one that's lower, all right? So now, so I'm going to find this an imbalance. Yeah, I'm not complex in this, not making this thing too complex for you. Just that that's what could warrant the market to return back to the region. When there's an imbalance left behind, then expect that that market probably will return back to that region, to actually fetch out the balance and then balance of the whole thing and then continue to move. And you can have a situation where this market will return back and sweep this liquidity and continue or break as it were. And remember, we said this is the total market change until it comes down there. But will you be waiting for that? No. So you now have to define the means to make the money you want to make in the system. Okay, so let's go to sometimes 30 minutes, just repeat what you've seen on 1 hour. So, but let's nevertheless step down to 30 minutes. So it's more or less going to repeat exactly what you have. But one other thing you could actually find on 30 minutes is like you want to see a kind of structure has been broken here. This is a high, this is a low, this is a high, this is a low. Now, this is a market structure break of structure. So this is broken. Okay. Now that this is broken, so what you expect is very simple. what we expect is that the markets to pull back and then come down. So you're looking at different places. Now, remember what I say here, that this is an imbalance area. So the market want to travel to the point. And so traveling to this point is either you patiently wait for it to mitigate this point or actually return back to the demand zone, and then you want to look for a buy. Depending on the pattern of the candlestick that play out or price action that play out at that region. Now, that can make me to step down to 15 minutes. Now, listen, if you do not do a top-down analysis like this to check some key levels, now you're just going to be trading at random, and that's not going to help you. Yeah, that's not going to help you. So the market, high, low, high, down, structure broken, and then you're waiting. So this guy to this, now if you stretch this imbalance up here, it's going to align with some stuff and all that. So what should I do right now? Nothing. So rather have to wait to confirm when the market actually traveled down. So now being a scalper, you probably want to go down to 5 minutes. Now listen, apart from being a scalper, you can go down to 5 minutes to refine what you are looking at. All right. So that helps you to refine and then be able to see more, and then that's what give you a sniper entry system. Now, so you can see what I have just done. Very simple, right? Now, another thing you probably want to do with this is that you want to go ahead and probably add supporting indicator, and two of them you are going to add is moving averages, right? And the one I encourage you to put if you're as a day trader is 50 moving average. So 50 moving average, if you go to indicator, and then you go to type EMA, so it pop up. So let's go to indicator. All right, we'll type EMA. So that's moving average exponential. Then you can actually make it to be, what do we call it? Okay, you can make it to be favorite, and then you add it up. Okay. So we have added it up. Now the next thing you want to do on the EMA is to make it very simple, and then configure it to your 50 moving average. Is to go to it and go to the settings, right? And then go to input and then type 50, of course, come to style, and then remove all this label, and you're good to go. Very simple. Now, what does it do? It's not what you are depending on to trade, but it has helped you to identify some level of rejection. Some prefer to use 200 moving average. So if it's 200 moving average, you want to use the same thing, but just that opportunity you find on 50 as a day trader and a scalper, 200 moving up. Look at what I was doing. Let's go ahead and put it. Right. So if you like 200 moving average, you're going to go to settings, go to input. Yeah. And then you're going to type this one, 200. So let's take off all of this label, and then boom, there you go. So you can see, right? So anything below 200 moving average, 50 moving average, you are looking for a sell, right? And that's exactly what you're doing. So can return it back, right? So let's return it back. We return it back to 50 moving average. All right, so let's go there. 50 moving average. It's cool? Yeah, it's cool. Right, good. Okay, so here we go. So ordinarily, when you saw the market here, and you are here, market broke down below here, you want to sell down here. Your stop loss above this point. And again, it gives you more confidence is that, though even if it's 5 minutes, but because you have identified the higher time frame, all right. So the point is this: you look for a sell below 250 or 200 moving average, and of course, you're looking at some key levels that you have identified, which are swing low, and you want to target your take profit down that point. Okay. Now the question you ask now is that when do we find an entry in this matter? Okay, so let's just go ahead. Remember, I told you, I said after a break of structure, you expect the market to pull back, right, before continuing the journey, because this is a break of structure. Now, additional indicator probably you could add to A, yeah, it's your RSI or, right? So let me take off this. It's your RSI or your MACD. So anyone you prefer, simple. So let's take MACD first. MACD, sometimes I customize my own MACD. MACD is called moving averages, convergence, and divergence. Now, so you add it up, and then so it's going to give you the momentum shift, okay? Shift in momentum is what MACD is going to give to you. So you have to be very careful when the market is not trending. MACD is going to give you some wrong signal, so you understand that. Okay, but so look at it now. So MACD, I'm not going to go to define what MACD is minus 26 and 14, a 12 moving average minus 26 and all of that. So now look at it. MACD crosses below, that is MACD line crosses the signal line down, right? And then the histogram painted red. Of course, there were no volume here. The liquidity was so slow. So that's a sell. And you already have your own market structure. You have marked, and then it's okay. I may not sell here because you are looking at this as a support, right? And then look at it. It broke down, and then look at it instead. That should be your entry, okay? So that means it's cool. Now, so even these as the change of break of structure. So we can extend it out here. Just understand that what you are trading is support and resistance. So what you want is this, the market to rally back and get rejected here, or can even rally back over here, then that's where you want to be finding some selling position, all right? Except you're selling and then DCA into the market, none of that. So you can see MACD. Yeah, MACD is cool, right? It shows a lot of things, but you don't depend on them. You only use them as a conference, okay? Okay, so now, for instance, if I want to enter a short, okay, so, okay, I have an account here. Quite unfortunate that I was busy, okay. Let's look at it very quickly. Okay, so I want to enter very little shots on that. Because we're supposed to wait for it to return back here to retest this point, then we look for an entry. Yeah, but this, I think it opens, return down. Excuse me. So this is, I've told you about the MACD. So let's look at the RSI. So if you click on indicator and you look for relative strength index, so you enable it, relative strength index. Okay, I've not taken out the MACD, perhaps. So I'm going to take out the MACD because you can't have more than two indicator if you're using free account. Moving average, right? Here you have the RSI. Okay, so here we have the RSI. You can leave it the way you want. You can do the setting as you want. Okay. So RSI, take off all this label. Background field, I take it off. Okay, so after this engulfing, I'm supposed to be shorting, but let me just take a little position for shorting at 0.01. I hope I was on good. All right, so look at short the market. Now, ordinarily, when you are in, so all of this is below 50 moving average. This was a short, this was a short. So I said the market's supposed to come back here. So I just take a little position. And then so that when you short over here, your stop loss above there, and all of that. All right. So now just take off this background and then probably do the needful. Then you take off this EMA base of, right? RSI based EMA. You can take it off if you like. If you would like, you can leave it out. Right. So if you look at, so this is RSI now. Now, one thing about this stuff is that it's not about the kind of a thing. It shows you divergence, and we know what divergence is used for. All right. So it shows you divergence, and probably you want to make the center line to be noticeable. Okay. So I'll put it red to even show us very well. All right, so you can see now the RSI ordinarily. Let me show you something that's very important because of the momentum indicator. So the RSI was here, though this is 5-minute time frame, at the overbought area, right? And I was already signaling that, okay, man, we're gonna go down and then sideways. Now breaking, this is 50 average of RSI, and the market went below it. That means a bearish market. That's exactly what happened here. So the market was already showing that. So you're just paying close attention to some of those things as a conflict with your price action. Support and resistance strategy is a very powerful strategy to be profitable in the market. Okay, so that's a simple thing you probably want to learn to understand how the market is permutated. All right, so you have, opportunity to examine different, right, different pairs. Okay, so I think I was on the trade on this. So you can see bouncing from 50 moving average, looking for entry, and what the like. All right, so ladies and gentlemen, this is a very simple strategy to trade. Simple support and resistance strategy. Very, very simple to trade. You just know how to mark your key levels, do your top-down analysis. So it's not when market get to a point you're drawing the support zone, you will have also have identified it. And then so when the market gets there, there are expectations you have. Okay, so we're nice for profit. So there are expectations you have, okay, when the market return here, I'm going to short or I'm going to long because you have an understanding. All right. So ladies and gentlemen, for you to be part of our system, right? It's very, very simple for you to be part of our system. I know a lot of people are struggling to be successful in trading. Now, this is simple. I'm going to show you. All you need is coming into register in a broker, right, called Capital Extend, right? So look at this for yourself first, trading with support system, unlimited Capital Extend opportunity, right? Register on Capital Extend and fund your account with a minimum of $200 to gain free access to my paid signals for 1 month and maintain a minimum balance of $500. Pardon, that's okay, yeah, $500 and to have access up to 3 months, increase your access to 3 months, and trade up to 1,000 and maintain minimum balance of 1,000. You have access to 1 year free signals. All right, you can see the way it works, all of this here. Right? So you can screenshot it and all of that. You want to be part of it, it's going to be fantastic for you. Now, other alternative and opportunity probably you could have that we have other support system, but I'm not going to talk about that now so that the video will not be too long. So we have different strategies or stuff or platform that are going to help people, right? That are going to help people to trade very simple and then make a lot of profit. So, but this is the first segment. So you want to sign up, but it costs a token amount that you have to get a room with. So fund your account, follow all those processes I showed to you, and you have access to so many things on our platform. Then you have access, of course, farm trading account for investors who just want to invest passively, but you don't give your money to us. You fund your account and show you how it's being connected. Then you can maximize passive income as it were through corporate trading and farm um, management. All right. So this is a simple thing to show you your support and assistance strategy, very primitive but productive. And so better and primitive, productive, than I'm up to date and I'm not productive. But ladies and gentlemen, this is a fantastic opportunity that you cannot afford to lose. So you get chat with me on my phone number +234-90-470-44 and 99. I'll take the number again, +234, right? 90-470-44 and 99. We're moving very fast, and then we can empower a lot of people who are ready to be empowered. To make money, it's a lot fantastic. So this is simple. Follow the procedure, market, irrespective of the market. You have the same data to back them if they are coming, and then where they are and all of that. So ladies and gentlemen, so try as much as possible. Chat up with the phone number +234 +234 90-470-44 and 998 so that we can talk together and I'll put you through on a cash flow solution. Then you have access to the link to register on Capital Extend. It will direct you on how to fund your account, and then you get started with us with Capital Extend. Other things are available on the subsequent training meeting that's going to be available to show us who want to leverage and take advantage of that. That's going to be up to you. All right, so thank you very much. Check out, make sure you like this, and then put a reminder so that once anytime a video pops up, you can have access to it. Like and share to everyone around you. And of course, comments of your opinion about what you feel. All right. So my name again is Lucas Fajimo, the team leader of Plan B Express. Thank you. So this is the Cast Move Solution channel. You have a nice time. Bye.